Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I am Ryan McQueeney, an associate stock strategist here at Zach's, along with one of our editors, Maddy Johnson.
Hello. Today is Friday, June 20th. Not June, actually. It's July, which means it's almost August, which means it's basically fall. Time for Halloween.
Yeah, that's true. Which means we should probably get the Christmas decorations out.
Yeah,
also.
it's basically 2019 already. Anyways, we're here like always to recap this week's biggest stories from the investment and financial world. It's all about earnings, and more earnings. Sprinkle more earnings on top of that this week as some of the market's top stocks filed their latest quarterly financial results over the past few days.
Yeah, we got FANG stocks, we got oil stocks, and we even have a recent IPO company to talk about today. But before we get to those, we'll start with one trending internet stock that gave us a double whammy, an earnings beat and a major acquisition.
Yeah, Grubhub. I use Grubhub a lot on the weekends.
More than I should.
More than I should. Exactly. So shares of Grubhub rose almost 23% on Wednesday after the company announced its plan to acquire mobile food ordering platform Level Up. On top of reporting strong sales and profits in the latest quarter, in fact, the online food ordering company surpassed earnings and revenue expectations for the fourth consecutive quarter. It saw $1 billion in quarterly gross food sales, which was a 39% increase year over year, and it counted 15.6 million active users in the latest quarter. And this number was up 70% from just a year ago. However, Guggenheim Partners analyst Matthew DeFrisco said that although, quote, earnings were a fantastic beat, unquote, the news of the Level Up acquisition is the biggest contributor to the impressive gain in share prices. So Grubhub said its $390 million purchase of Boston-based Level Up would help bolster its order volume and make it easier for big-name fast food chains such as KFC, great fried chicken, and Taco Bell. I love their chalupas. What's your favorite Taco Bell item?
Wow, that's like asking which one of your kids do you love the most. I would say any of the various nacho orders. You know, whatever you want to spend, you can go nachos, just kind of up the ladder, essentially, getting more and more ingredients added to the top of them. And when you just get like a full-on like nachos Bill Grande, like, and you just get
that's a good choice.
Meat and cheese all over it,
hot sauce,
sour cream, applying an entire packet of hot sauce per chip. Like, it's just, it's great.
So now that will all be integrated with the Grubhub platform.
Yeah,
kind of like competing with newer apps like Postmates and Caviar, DoorDash, which has been kind of, and Uber Eats, which has kind of made a name for themselves for being able to get like fast food chains.
McDonald's
specifically McDonald's delivered.
Yeah, and Level Up also is cool because it includes some like customer loyalty, customer rewards stuff. And so you kind of like, you know, as you interact with it, you gain
level up
points and stuff for what you like to do. And from what I could interpret from what Grubhub said, they basically were like, yeah, we're just going to kind of swallow the company as is, keep everybody on the staff in our umbrella now and bring it in. So should see some more interesting stuff from them. Moving on to another cool young tech company making some waves. We got Spotify. Spotify shares surged to a new all-time high on Thursday after the company reported its second quarter financial results and second ever earnings report as a public company. Total revenues jumped by 26% from the prior year, reached 1.27 billion euros, which, you know, you get some weird, how do you convert it? Because it's like, do you convert it now or do you convert it when the quarter ended? Let's say it was about 1.5 billion in US dollars in revenue, which it technically slightly missed our Zach's consensus estimate, which was at $1.51 billion. But as we'll get to in a second, wasn't really what people were focusing on anyway. Interesting other things to note, though. Spotify reporting an operating loss of 90 million euros, or about 7% of that total quarterly revenue figure. But gross margin of 25.8% came in at the high end of Spotify's own guidance range. And then this was the big thing that investors seem to be focusing on, and that's the user growth. So monthly active users worldwide surged 30% year over year to reach 180 million. The company said the Latin America and rest of world regions contributed more heavily to this growth than places where it's already big, like USA and Europe. That 180 million figure is a combination of people who are premium users and people who use the free ad-supported version of the platform. So ad-supported MAUs were up 23% to 101 million users, and then premium subscribers soared 40% to close at around 83 million. So over 180 million people using Spotify every month. Crazy number, crazy big.
Yeah.
By far the leader in music streaming. So cool.
Yeah. So moving on to FANG stocks, we wrapped up the acronym this week with Google. On Monday, they reported diluted earnings of $11.75 per share, a metric which excludes the potential EU fine, which was announced this week. It was like
we
a
covered
record,
it in
like
last week's show, didn't we? So
we did.
It was
like a record, like $5 billion.
Yeah.
This also includes a $1.17 per share benefit from a new accounting standard. Taking out this benefit, Alphabet reported earnings of $10.58, still crushing the Zacks consensus estimate of $9.51 per share. Meanwhile, total revenue was up 26% on a year-over-year basis and also ahead of estimates. In the Google Other Revenues category, which is comprised of the Google Play Store, Google Cloud offerings, and its hardware initiatives, including its growing Nest smart home automation division, revenue surged by over 36% to hit $4.43 billion. So a really nice report from Google, Alphabet Inc.
I love Nest because I love that Nest is we bounced it out into the Google Other Revenues category because you saw it graduated from Google's Other Bets category, which is like these long shot things that don't generate a ton of revenue, and it became a real product, and they bumped it up into Google Other Revenues category recently.
That's a good point.
You know, it evolves. These things evolve. Speaking of evolving, this is a very stretch of a segue, but speaking of evolving, Facebook shares evolved into not good on Wednesday. Reported quarterly earnings of $1.74 per share, missed the Zacks consensus estimate by a penny, and revenues of $13.2 billion missed our consensus estimates as well. That's a double miss for Facebook. Very rare double miss for Facebook. Rare. And then it got even worse. Quadruple, maybe even more than that misses in terms of estimates. On top of the top and bottom line misses, the company also failed to surpass our consensus estimates for daily active users and monthly active users. Both of those metrics were still up 11% year over year, which I think is important to say because we're still quite a bit away from a full-blown plateau. But,
yeah, that's a good point.
You know, when it was 11% and we wanted to see 12%, and then you missed on the top and bottom line, and you're telling us about how much more money you're going to spend on the security and data stuff, people got worried, and Facebook literally had one of I think its actual worst day of trading ever.
Well, for a company ever. And it lost $119 billion in market value.
In one day.
That. Yeah. Literally with a snap of a finger. I don't know how many billions of dollars Mark Zuckerberg lost personally.
Oh, that's got to be an article for sure. That's out there.
I think it's over 10. I don't know if it's like 15. I don't think it's 20 though. Who knows? Now I'm just making up numbers. But
there's definitely, what I love is there's beat writers in like Business Insider that I think their beat is just the personal wealth of the 5 richest people in tech. And then like as these stocks go up and down, they're just like, okay, plug it in. And they lost $20 billion today, or they gained $20 billion today.
I will say, I pointed this out yesterday, or Tuesday when Facebook reported. Wednesday when
Facebook,
I don't know.
It was Wednesday.
It was Wednesday.
Yeah. Been a long week.
Yeah. The articles that were being published across the spectrum of financial news reporting, regular reporting online, on the internet, people were picking the worst pictures of Mark Zuckerberg to headline all of the articles.
That's right.
And it was
do.
Pictures during all the Senate hearings for the data privacy scandals.
When he's on his booster seat.
When he's on his booster seat. And he looks he does not look great. And he looks sallow, bags under his eyes. He's so sad. It's not like you're going to pick a picture of him like smiling at his Facebook conference,
no,
but
of course not.
No, but like, man, they did him so dirty.
This is not 100% relevant to anything that we're talking about, but I'm going to share it anyway. Have you seen that supercut video of his Facebook live stream of him barbecuing in his backyard?
No,
Have you ever seen that?
No.
Okay. So he was on Facebook Live barbecuing like ribs and burgers and
honestly, I'm impressed that he grills
brisket. He said the word brisket like 800 times. But he was on Facebook Live. This is, let's be honest ourselves, Mark Zuckerberg not known for his charisma at all. And he's on Facebook Live on a computer in his backyard while he's barbecuing, which is not traditionally something that you like bring the internet into, right? And he's on it for like, it's got to be 2 hours or so of him barbecuing on Facebook Live, as a way to like just share the technology and connect with Facebook people, whatever. Someone went through and like edited it and cut it up so that it's just like every time it's just a super cut of him saying the word brisket and him saying the word ribs over and over again. So it's just like 15 minutes of him going, and we're cooking some brisket, and we got some brisket, and then he's doing that weird, I'm live streaming something on a webcam that's in front of me, so I feel the need to like point to stuff that's happening behind me, like really awkwardly reach behind me and hover my hand above it, as even though it's 20 feet behind me. So he'd be like, we got some brisket in the cooker back here. We got ribs, Sweet Baby Ray's. And then it was
great barbecue sauce.
It was just like 30 seconds of him going, we got Sweet Baby Ray's. We got Sweet Baby Ray's. It's one of the most hilarious things I've ever seen. And it's total confirmation that he, like, I'm going to get in trouble for saying this by the law, but not total confirmation. But if you happen to believe that all of these billionaires and politicians are lizard people in human suits, this would be a video that you would watch as evidence, because it is absolutely ridiculous.
Oh, man. Speaking of another potential lizard person, Jeff Bezos, Amazon.
The king of the lizard people.
Amazon reported earnings on Thursday, the complete opposite of a Facebook report. They just like blew it out of the water.
Yeah. I don't get it.
I don't get it either. I just like look at their report and I just like don't understand these numbers. So they reported adjusted earnings of $5.07 per share, which just crushed our $2.49 per share estimate. Total revenues climbed by 39% from the year ago period, but actually fell short of our $53.45 billion Zach's consensus estimate. In particular, Amazon's AWS business skyrocketed, which is their cloud business, skyrocketed 49% from $4.10 billion to hit $6.12 billion in the second quarter. Physical store sales totaled $4.31 billion. Also, Amazon's overall operating margin was 5.6%, which is low by typical standards, but is twice that of year-ago levels.
Yeah, just ridiculous. Doubling your operating margin.
Yeah, it's pretty crazy.
I don't get.
But I will say, the pictures that people pick of Jeff Bezos are like crazy. Of him, like happy Bezos. He's like open mouth laughing, and it's like he's like at the Globes, like ha 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 ha.
Oh,
and
yes,
he's like,
he loves the Globes.
He loves hanging out with famous people. Like he's always invited to the Oscars, clearly because he's Amazon Studios. But he looks wildly happy in all the pictures that he's in.
Yeah, but I like
as he should be. He's like the richest person in the world.
Let's acknowledge that. Like we always are talking about Bezos at the Globes, Bezos at the Oscars. Like, have you ever seen Reed Hastings at any of those events? If he's been there,
I
he
don't even
gets
know.
in and out without
To be honest,
much
I don't
to
know
do.
what Reed Hastings looks like, so he could be.
He looks like a guy. He looks like one of the most regular looking dudes of all time. But
He probably blends in. If he's there, he blends in.
that's
Jeff
what I'm
Bezos
saying.
is
Is
bald.
like
He's
Bezos
shiny.
is like, I'm here. I'm friends with these people. I have billions of dollars.
You want this free 2-day shipping?
Yeah.
Let me get it. Let me get it to you.
Yeah. Okay. So that was the rest of the FANGs. And then we even looped in Reed Hastings and Netflix too. So we got the full FANG acronym there. Another thing, we're going to wrap it up with a brief look at the oil stocks. I would say, a year ago at this time, we probably wouldn't have even been talking about oil stocks on the show that much. And then since then, it's just been craziness going on in the oil market. Yeah. Really the energy sector at large, with all the nuts stuff we've seen from OPEC trying to get a grip or whatever on global production, as we've seen production go up and down. We've seen these chaos in Venezuela have an issue with output or cause an issue with output. We've seen issues in Libya cause problems with output. Then we had the Iranian stuff happen. New sanctions there means output is going to be all askew. So oil's been a whole big mess, and it's been hard to kind of put your finger on what's going on at all times and what's going to happen. Predicting the next move with oil has been very difficult. And this week we got most of the big oil behemoths reporting. So I'll start with on Thursday, Royal Dutch Shell reported weaker than expected second quarter earnings, as lower downstream results offset strong contributions from the upstream and the integrated gas segment. Revenues of $99.3 billion. Crazy amount of revenue. That's 37% higher than the second quarter of 2017, kind of showing, I guess, the change in price really over that time.
Yeah, definitely.
Shell also said that it will start the program to repurchase at least $25 billion in common stock for the period between right now through 2020. So that was kind of a sigh of relief for Shell investors. That repurchase program wasn't, I wouldn't say necessarily uncertain, but getting confirmation that that is underway, and that is $25 billion, quite the repurchase program. So
yeah,
definitely the story out of that report. And then on Friday morning, we got ExxonMobil.
Yeah, another giant, ExxonMobil. They reported earnings per share at 92 cents, which came in below the Zacks consensus of $1.26. However, revenue of $73.5 billion was higher than the estimate of $70.3 billion. Production averaged 3.65 million barrels of oil equivalent per day, lower than the 3.9 in the year-ago quarter. Natural gas production was 8.6 million of cubic feet per day, down from 9.9 in the year-ago quarter. A decent report from Exxon, but still a little bit below what we were expecting.
It was down about 3% at the open today as well. Chevron was also down at the open after reporting, although the last time I checked, as we're trying to keep up with the morning moves, looked like it had bounced off that low and was heading back to yesterday's close. So don't quote me on that, but might be one to watch as the day goes on. Chevron reported earnings per share of $1.78. That was slightly lower than the Zacks consensus estimate of $2.06. Total production of crude oil and natural gas, unlike Exxon, increased 1.7% compared with last year's corresponding period. The rise in production was supported by higher oil realizations, and that resulted in a nice, healthy improvement in Chevron's upstream segment profit. If you think about what I said earlier, from Shell also had strong contributions from the upstream business, so potentially an interesting storyline there. And then same deal with Chevron. It seemed like the big story was approving a share repurchase program, and Chevron said it is going to plan to buy back $3 billion worth of common stock per year in this repurchase program. So that's the oil behemoths. That was Thursday and Friday. We had the rest of the FANGs coming out throughout the week. We also had Spotify, Grubhub, and like hundreds of other companies as well that we did not talk about today.
Starbucks, Chipotle.
And a mixed bag of results and a mixed bag of reactions to those results.
Yeah.
And we'll have the same thing going on next week. So tune in again next week for the latest on earnings and everything going on in the investment and financial world. That does it for us this week. As a reminder, please feel free to shoot us an email at podcast@zacks.com if you feel that we missed anything or if you want us to cover a different story. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. We are also available on Spotify now. Search Zacks Investment Research there, and you should be able to find all of our shows. Thanks again for joining us. We will see you next time on the Zacks Friday Finish Line.